Hey everyone, welcome back. Ready for another deep dive.
Always up for it. What are we dissecting today?
Today we're tackling Johnson & Johnson's Q3 2024 earnings, fresh off the press.
J&J, huh? They're everywhere these days. Must be doing something right.
Right, and this quarter is no exception. But we're getting ahead of ourselves. Before we get into the nitty-gritty, let's set the stage. We're talking about a company that's not just keeping up with healthcare trends, they're setting them.
Yeah, they're not exactly a small fish in the pond.
Yeah.
So what's got you excited about this particular report?
Well, for starters, did you know they've become a category leader in not one, not two, but FR of the fastest growing areas for cardiovascular medical devices?
Whoa, 4. That's a pretty big deal. How'd they manage that?
Strategic acquisitions, my friend. They've been on a bit of a shopping spree, snatching up companies with cutting-edge technology.
Smart. If you can't beat them, buy them, right?
Something like that. But it's not just about the acquisitions. They've also been laser focused on this whole high innovation, high growth strategy. And this quarter, we really see it paying off.
All right, you've piqued my curiosity. Let's dive into the numbers. What kind of growth are we talking about here?
So they clocked in with a solid 6.3% operational sales growth this quarter.
Okay, 6.3%, not too shabby. But for our listeners who might not be finance whizzes, break it down for us. What makes operational growth different?
You're right. Got to keep it accessible. Operational growth is basically a way to look at a company's growth without all the noise from things like currency fluctuations. It gives you a clearer picture of how their core businesses are actually performing.
So it's like looking at their sales growth without any economic static. A pure measure of whether they're actually selling more, not just benefiting from a favorable exchange rate.
Exactly. And in J&J's case, that 6.3% suggests their strategic shift is yielding tangible results. But let's get specific. Two segments really stole the show this quarter: MedTech and Innovative Medicine.
All right, let's start with MedTech. Double-digit growth in their cardiovascular portfolio is hard to ignore. What's driving that?
Well, remember those strategic acquisitions we talked about? They're definitely playing a role here. They've been beefing up their cardiovascular portfolio, and it's paying off.
Makes sense. They've got their fingers in a lot of pies. Any standout players in that portfolio?
Absolutely. Their acquisition of Shockwave Medical, for example, has been a game changer.
Shockwave. They're the ones with that sonic pressure wave technology, right? Sounds like something out of Star Trek.
Yeah, it's pretty wild. We're talking about blasting away artery blockages with sound waves instead of relying solely on stents. It's revolutionizing treatment for cardiovascular disease.
And J&J saw the potential and went for it. Not surprising, they've got a knack for spotting winners.
Speaking of winners, we got to talk about DARZALEX over in their Innovative Medicine segment. This quarter, it hit a pretty major milestone.
Hit a milestone. Shattered it. First J&J product to ever hit $3 billion in sales in a single quarter.
$3 billion. That's not just chump change. It's a testament to their dominance in the multiple myeloma market.
And a huge win for patients who are battling this complex disease. It's good to see innovation translating into real-world impact.
Couldn't agree more. But DARZALEX isn't their only success story this quarter. Their CAR T-cell therapy, CAR-VKTI, also saw some impressive growth, like almost 90% growth, if I'm remembering correctly.
Wow, almost 90%. That's not just growth, it's practically a vertical climb. RVKTI is definitely one to watch.
Definitely. And they're not slowing down anytime soon. They also snagged some key FDA approvals this quarter, which could mean big things for the future.
Ooh, FDA approvals always get investors excited. What did they get approved? Spill the tea.
Well, for one, they got the green light for Rybrevant as a first-line treatment for a specific type of lung cancer in combination with chemotherapy.
Okay, so why is that such a big deal?
This particular type of lung cancer, it accounts for a significant chunk of all lung cancer cases. So we're talking about a massive potential patient population.
Ah, I see where you're going with this. Big patient population equals big market potential.
Exactly. And J&J seems confident that Rybrevant could become the go-to treatment for this type of cancer, which, if it plays out, could mean huge things for their bottom line.
Smart move. So what's the other big FDA approval?
Well, remember TREMFYA. It's already a key player for them in other inflammatory bowel diseases.
Yeah, I remember. Seems like it's working out well for them.
It is. And now they've got FDA approval to use it for treating ulcerative colitis too, which is a smart move because they're already a major player in that market with their drug Stelara.
So they're leveraging their existing expertise to expand into new territory. Makes sense.
Right. They're playing the long game, and it seems to be working. But as with any good story, there are always a few bumps in the road.
What kind of bumps are we talking about? Don't leave us hanging.
So we've talked a lot about the big, flashy innovations, but J&J also has a whole portfolio of, shall we say, classic products.
Right, those everyday essentials that might not make headlines but are still crucial for healthcare. The bread and butter stuff.
Exactly. Things like Band-Aids, over-the-counter meds, even surgical sutures.
And those are no small potatoes. They might not have the same explosive growth potential as a cutting-edge cancer drug, but they provide a steady, reliable revenue stream.
It's all about balance, right? You need those reliable performers to keep the lights on while you're investing in the next big thing.
Precisely. But that doesn't mean those classic products can't evolve. J&J is also innovating within those areas, just maybe not as dramatically.
Give us an example. How do you innovate on a Band-Aid?
Well, maybe not a Band-Aid specifically,
What?
but take surgical sutures. Not the most glamorous thing, right? But J&J is a leader in developing bioresorbable sutures.
Bioresorbable. Sounds complicated.
It's actually pretty cool. These sutures are designed to dissolve naturally over time, so patients don't need a second procedure to have them removed.
Okay, that's pretty slick. Less hassle for the patient, faster recovery. That's innovation at its finest. But even with a solid strategy and a history of innovation, no company's immune to challenges. And this quarter, it looks like J&J is facing some headwinds, especially in the Asia-Pacific region.
Yeah, the Asia-Pacific region, especially China, has been a bit of a mixed bag for them. Their medtech segment, in particular, has hit a few snags.
What's going on over there? Increased competition.
Competition's always a factor, of course. But J&J's pointed to China's Volume-Based Procurement Program, or VBP for short, as a major challenge.
VBP. Refresh our memory. What is that again?
Basically, it's the Chinese government using its massive buying power to negotiate lower prices for drugs and medical devices. Bulk buying for healthcare, you could say.
Okay, so good for the Chinese healthcare system, maybe not so great for companies like J&J.
It's a trade-off. Lower prices are great for patients, but they can make it tough for companies to recoup the costs of research and development, especially for those pricey new drugs.
So how's J&J dealing with this balancing act?
Carefully, you could say.
Hmm.
They know they can't just ignore China. It's a huge market. But they also need to protect their bottom line.
Makes sense. So what's their strategy?
They're trying to be strategic about which products they focus on in China, emphasizing those where they have a clear competitive edge. And they're exploring partnerships with local companies, which could help them navigate the regulatory landscape a bit better.
So a more nuanced approach, not giving up on the market, but adapting to the realities on the ground.
Exactly, and it's not just China. They've also mentioned some slowdowns in places like Korea and Japan, driven by things like macroeconomic factors and local healthcare policies.
So a bit of a perfect storm brewing in certain parts of Asia. But J&J's a global company. They've got a lot of irons in the fire.
Precisely. They're seeing good growth in other regions, like the US and Europe. So it's not all doom and gloom.
That's the beauty of diversification, right? Not putting all your eggs in one basket.
Exactly. And despite these regional challenges, J&J is still making big moves, like their recent acquisition of V-Wave. Now that's exciting.
V-Wave. Tell us more. What do they bring to the table?
They're doing some groundbreaking work on heart failure treatment, developing a minimally invasive implant that could be a game changer for certain types of heart failure.
Wow, minimally invasive. That's a huge deal for patients, potentially life-changing.
Absolutely. And it's another example of J&J investing in truly transformative therapies. But let's address the elephant in the room, shall we? The ongoing Talc litigation.
Right, we can't just ignore that. It's been hanging over J&J for a while now.
And it's something we'll need to keep an eye on. For our listeners who might not be familiar with the situation, we won't go into all the legal details, but it's important to acknowledge the potential impact it could have on J&J's future.
Absolutely. Our listeners are a savvy bunch. They know this litigation is out there, so what's the latest? Any updates?
Well, recently, J&J's proposed plan to use a prepackaged bankruptcy process to resolve the Talc claims got a big thumbs up
Thumbs up from who?
from the majority of the claimants involved in the lawsuits.
Okay, so that sounds like a step towards resolution. Does that mean it's all smooth sailing from here?
Well, not so fast. While the support for the plan is a good sign, it's not a done deal. Still needs to be finalized and approved by the courts.
So, still some hurdles to clear. But it sounds like things are at least moving in the right direction.
We'll have to see how it all plays out. It's a complex situation, and it'll be interesting to see what the long-term implications are, even if J&J does successfully navigate the bankruptcy process.
Agreed. But for now, let's shift gears back to J&J's overall financial outlook. Despite the challenges we've talked about, they're feeling pretty good about the future, right?
They are. In fact, they've actually bumped up their adjusted operational sales guidance for the year, which is a pretty clear sign they're confident in their ability to weather the storm and deliver strong results.
That's a powerful signal to investors, especially in these uncertain times.
Absolutely. They're basically saying, hey, we've got this. But let's not forget about the other elephant in the room, the one we haven't talked about yet.
You're right, the talc litigation might be showing signs of progress, but it's still a major factor to consider when we're thinking about J&J's long-term prospects.
It's the big question mark looming over their otherwise positive performance. So let's unpack that a bit. What are the potential implications here, even if they manage to resolve the lawsuits?
Yeah, what kind of ripple effects could this have?
Well, the financial aspect is one thing. Those lawsuits could get expensive. But the potential damage to J&J's reputation and brand is a whole other beast.
That's a really good point. In healthcare, trust is everything. So how is J&J handling that aspect of things?
They've been very vocal about their commitment to transparency and accountability throughout this entire process. They keep saying they want to make sure all valid claims are addressed fairly.
Which is a delicate balance to strike, right? They have to protect their own interests, but also acknowledge the concerns of those who've been affected.
Exactly. It's a tightrope walk, and it'll be interesting to see how they manage these competing priorities going forward.
It's a lot to unpack, that's for sure. But let's take a step back for a second. For our listeners who are trying to make sense of it all, what are the key takeaways from J&J's Q3 performance? What does it tell us about the future of healthcare, not just for J&J, but for everyone?
Well, I think the biggest takeaway here is that J&J is not just along for the ride. They're actively shaping the future of healthcare. They're laser focused on those high growth, high innovation areas, and they're not afraid to make big moves to get there.
They're definitely not afraid of a little risk, are they? But what does that mean for the average person who's not a Wall Street guru? Why should they care about any of this?
It means J&J is a company worth keeping an eye on. And not just for their bottom line, but for the potential impact they could have on how we experience healthcare in the years to come.
So, like, they could be on the verge of something really big, something that could change everything.
Exactly. And while there are always risks, J&J's got a long track record of innovation, of adapting to change. They've weathered their fair share of storms.
They've definitely been around the block a few times, but at the end of the day, healthcare isn't just about profits, right? It's about making a difference in people's lives.
100%. And it seems like J&J is really trying to strike that balance between pushing the boundaries of what's possible while also staying true to their core mission of improving people's health.
It's a tough line to walk, for sure. So, what's next? What should we be watching for with J&J?
Well, they've got a lot of irons in the fire, several drugs in their pipeline that have the potential to be absolute game changers. But of course, they've also got those lingering uncertainties with the Talc litigation.
It's like a game of chess, isn't it? They're making these strategic moves, but they've also got to be prepared for whatever curveballs come their way.
Precisely. And that's what makes following a company like J&J so fascinating. They're a microcosm of the healthcare industry as a whole, constantly evolving, always innovating, and never a dull moment.
Well said. It sounds like J&J is going to keep us all on our toes for the foreseeable future. And as always, we'll be here to break it all down for you every step of the way.
That's right. We'll leave you with this thought. J&J's clearly aiming for the top spot in the ever-changing world of healthcare. Can they maintain their momentum and come out on top? Only time will tell, but it'll be exciting to watch it unfold.
Absolutely. Thanks for joining us for this deep dive, everyone. Until next time, stay curious.